Welcome back to the Stocks Update. As we gear up for a new trading week, there are quite a few key developments and events on the horizon that investors need to keep a close eye on. It's important to note that this will be a shorter trading week since the markets will be closed on Monday in observance of a public holiday. That means we're starting fresh on Tuesday, and the rest of the week is loaded with potential catalysts that could bring some serious action to the stock market. Starting off on Tuesday, there are a few Federal Reserve officials scheduled to speak. These speeches typically give hints about the Fed's stance on interest rates and inflation, so it's worth paying attention to any surprising remarks. Also expected is the report on durable goods orders, which analysts are currently forecasting to show a significant drop, about a 6.8% decline. If that number comes in better or worse than expected, we could see some movement in the market. But it's really the second half of the week where the real fireworks might begin. Come Wednesday, we'll be getting the minutes from the most recent FOMC meeting. While previous minutes haven't dramatically shaken the market, that's largely because traders had already priced in what the Fed was likely to say. The same may happen this time around, but we can still expect some volatility leading up to and possibly after the release. Historically, the Fed's messaging has been consistent. Decisions on interest rate cuts will be based on incoming economic data. And this message holds significant weight for the electric vehicle EV sector, which is particularly sensitive to interest rate policies. Lower rates tend to benefit growth companies like those in the EV space, since they often rely on financing and investor sentiment to fund expansion. Naturally, any hint at future rate cuts will likely be welcomed by EV investors. Thursday is when things start to heat up even more. That's when we'll receive the latest GDP data, a key indicator of overall economic health. On top of that, the PCE inflation report will be released, and this one is especially important. While the Consumer Price Index (CPI) gets a lot of media attention, the Federal Reserve actually places more weight on the PCE when evaluating inflation trends. So Thursday's numbers could be make or break for how the market reacts. Friday will continue the data parade, and it's likely the market will still be digesting Thursday's results. But another major event that could shake things up happens on Wednesday evening: NVIDIA's earnings report. Given how influential NVIDIA has become, especially with its dominant role in AI and semiconductor sectors, its financial performance and forward guidance could have ripple effects across the entire market. Aside from these major economic and corporate events, not much else is expected to disrupt the broader market in a meaningful way, at least for now. But when it comes to Lucid Motors, there isn't much on the immediate event calendar. The company has no upcoming fireside chats or high-profile presentations planned, and apart from their ongoing presence in Atlanta and the recently wrapped Geneva Open, there's nothing significant scheduled. What this means is that Lucid's stock performance this week will likely be influenced more by macroeconomic events like interest rate outlooks, inflation data, and geopolitical tensions rather than company-specific developments. Speaking of geopolitical developments, there was a notable update on Friday. Former President Donald Trump made comments targeting the European Union over tariffs. In response, France has hinted at retaliatory measures, and if this situation escalates, it could have consequences for companies like Lucid that are planning to expand into European markets. Tariff wars can raise costs and reduce demand, especially for foreign automakers entering new territories. So this is definitely something to watch as the week unfolds. Now shifting gears to stock-specific insights, let's talk about short interest in Lucid. Surprisingly, short positions actually went up quite a bit on Friday. That's rather unusual because ahead of a long weekend, short sellers typically reduce their positions to avoid holding over an extra day when markets are closed. But this time, that wasn't the case. As of Friday, roughly 28.83% of Lucid's float is being shorted. That's a massive number, equaling over 355 million shares. So it's safe to say that short sellers are doubling down this week, likely in anticipation of negative data or weaker technical performance. With that kind of short interest, we can expect significant market activity, especially around Thursday and Friday when all the economic data hits. It's a high-risk, high-reward situation for both the bulls and the bears. Looking at investor sentiment, the bulls are currently aiming for a price range between $3 and $3.50, which would represent a decent upside from current levels. On the flip side, bears are expecting Lucid to drop below $2.50, which shows how polarized the market is right now. The options market also reflects this divide, with around 28K open interest contracts at the $3 strike price, and about 5K at $2.50. This suggests that if Lucid gets close to $3, we might see increased short activity, possibly aimed at driving the price down again. Some traders believe that short sellers are intentionally trying to break Lucid's technical support levels to trigger a broader sell-off. That brings us to the stock's technical setup for the week. As of now, Lucid is trading around $2.56, which puts it right between its R1 resistance and its pivot level. The first major support level is at $2.41, followed by a stronger one at $2.18. On the resistance side, the next barriers are at $2.64 and $2.78. Interestingly, there have been no new analyst upgrades or recent news articles covering Lucid. This silence suggests that the broader market and analysts are simply waiting for a strong catalyst before making any moves. Investors want to see execution, not just promises or plans. And now to one of the most critical observations of the week: Lucid's position between its 50-day and 100-day moving averages. As of Friday, short sellers successfully pushed the stock below its 100-day moving average, which sits at around $2.61. The next target for bears is likely the 50-day moving average at $2.47. Historically, when Lucid breaks below its 50-day moving average, the stock tends to experience a significant pullback, sometimes in the ballpark of 30%. Of course, the reverse is true as well. If Lucid breaks above the moving averages, it can spark a rally. But for now, short sellers seem to be in control and aiming to break the stock further to the downside. All of these elements: economic data, interest rate speculation, NVIDIA earnings, and tariff talk could collectively shape the market narrative this week. If GDP and PCE figures come in hotter than expected, it could spell trouble for growth stocks like Lucid. Add to that a potential escalation in global trade tensions, and there's a real chance the market could dip, allowing short sellers to press their advantage. Given all these variables, I wouldn't be surprised if Lucid ends the week trading somewhere between its pivot and first support level, likely hovering between $2.18 and $2.47. It's unlikely we'll see a huge drop unless there's a major negative surprise, but the risk is certainly there. So now, I want to hear from you. What do you think lies ahead for Lucid this week? Do you believe the stock will find a new catalyst? Or are we in for more sideways action and technical battles? One thing is clear: investors are growing impatient. There's been enough talk. Lucid needs to execute. Recent drone footage and manufacturing updates suggest progress is being made, especially with their Gravity SUV lineup. But is that going to be the spark that reignites investor interest? If Lucid were to announce a new partnership or roll out a mid-sized, more affordable vehicle, would that be enough to turn heads on Wall Street? Even under closer analyst scrutiny, Lucid remains a bit of a question mark. In a recent video I posted on my second channel, we covered the top 5 EV stocks according to Wall Street analysts, and Lucid barely made the list. While some analysts are starting to warm up to the company, most still view it with caution. That means the burden of proof is still on Lucid. They need to deliver results that validate the optimism of long-term investors. Let me know your thoughts in the comments below. What will it take for Lucid to change the narrative in its favor? Are you buying, holding, or staying on the sidelines? If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.